Now, did you actually know there's a weekly and monthly cycle of the fundamental drivers? If not, this is going to really open your eyes up to how the markets work on a week to week basis from Monday through to Friday, and then also through week 1 to week 4 of the month, right? There's a cycle of economic data on certain weeks, and the way the traders behave each week is also going to help you understand when you should be in front of the screens and when you shouldn't be, right? This is the structure of how professional traders trade. It'll give you structure and save you wasting endless hours in front of the screens waiting for something to happen. So sit back and relax, and I'll take you through the weekly and monthly cycle of fundamental drivers. This will really open your eyes up to how the markets really operate. First, the weekly trading profile. Monday, it's a pretty poor trade day, but a good day to do your technical analysis. Tuesdays, the global markets have reconnected. We're starting to get into action. Wednesday and Thursdays are your best days. Friday, well, it can be as loose as a goose. Now, let me just explain. So Monday's not a good day. It's low liquidity and potentially higher volatility. You've got the event risk from weekend news. Global markets haven't had time to reconnect, so you don't know exactly what's going on. But it is a great day to do your technical analysis. The middle of the week is best. Okay, Tuesday, it's okay. Markets have reconnected, and occasionally you get some really key macroeconomic data out on Tuesdays, but not all the time. Wednesdays and Thursdays are by far and away your best trading days. Direction is formed across most instruments, so we know exactly what's going on. You got full liquidity and lower volatility, and we usually have medium to high fundamental data released that you can take advantage of and gives the market fresh momentum. Friday, it's not as great as it sounds. You've got high impacting US data like the non-farm payrolls, low liquidity and potentially higher volatility around those releases. And really, it's a graveyard for traders who are just chasing back losses. Now, the monthly cycle of fundamentals, this is very important as well. Week 1 is very good. Week 2, also very good. Week 3, momentum starts to fade. It's pretty average, and you're relying on your technicals. Week 4, I'd say it's the worst trading week of the month, okay? You get a lot of central bankers speaking, and you start to lose all aspects of direction as the market awaits the following first week of the month, which is, once again, really good. Now, let me just do a bit of a deep dive into these components. Week 1 and 2, the best and most important each month. They are characterized by having key US directional macroeconomic data released, labor market data, and inflation data. This is where you get the excellent and excellent plus kicker trades. Okay, this is where they're in play. These are your best trading opportunities. Week 3, direction and momentum can often start to fade. The focus switches from the US dollar to other currencies. There's a lot of second tier economic data. Cross currencies are in play, and predominantly you've got okay and good trade setups. Week 4, sideways and directionless. And generally, there's a chance for a squeeze against the recent trend. You usually have lots of central bank officials speaking, and usually the guys that don't really have an impact. Second and third tier economic data is released, and predominantly you're looking at poor and okay trade setups only. So as you can see, if you can understand the weekly cycle and also the monthly cycle, you can manage your trading expectations around that, and you know when to focus on the markets, right? This is going to be very important to you working out a structure for your trading and planning ahead.